and it was out like, but it seemed like the sun was in the face, so I was trying to indirect the sun.
Well, that is definitely a beautiful space. Thank you for sharing it. Do you
You
get
bet.
deer back there often? Are you fenced off or is it pretty open?
I'm fenced off, but it's a neighborhood. I mean, the funny thing is deer is overtaking everything. So we see deer. And the other day I was at my buddy's house. We were sitting there drinking out on the front deck, front porch.
Mhm.
I mean, it wasn't 11 o'clock, and all of a sudden I see a deer run across his front yard, and I'm like, "Oh, look, it's a little baby deer." And then they jetted off the other way. I said, "Nope, that was a coyote chasing the deer." And he
No.
veered off, and then all of a sudden we're talking, and we hear a bunch of screaming, whatever. I'm like, "Oh my gosh, it's got something."
Aw, nature. And they're thinking the same thing about us. These humans are coming in our backyard. I was
That's
walking
right. That's right.
the other day on a trail in Decatur, and there was like four deer. It looked like two babies, so two does and two is no buck around, and they just let us walk by. It was no problem. I mean, they're
Isn't
used
that
to it.
great?
Like, yeah, I got it on social media. I mean, it's on my phone. I'm gonna post it one day.
Well,
I was social media saved in my phone.
truly, deer. I mean, we're actually having a population. From what I understand, we're having a population problem of deer. It's actually we have
Yeah.
too many,
Okay.
and there's not enough hunter that people don't hunt as much anymore.
Mm, yeah. Well, I wasn't a fan of hunting, but I get it.
Right?
Overpopulation. A lot of people, a lot of animals. That's definitely the space that we're in. But a lot of people need somewhere to live, Art. That's what
That's
we're talking
right.
about today.
That's right. Everybody's got to have someplace.
Everybody has to have somewhere to live. So, this is a great way to begin our conversation. I am Makeba Evans, global real estate professional. My stomping ground where I am licensed and able to assist personally myself or my team is Metro Atlanta, the state of Georgia. We got you, but all 50 states, several countries over the globe. If you need a place to call home, we help with luxury leases. We help with people that are looking to sell, buy, invest, all of those great things that have to do with real estate. I am able to assist you in that capacity. And I have on my virtual screen, he's also here with me, but we know that since 2019, 2021, like virtual is the thing to do, and Art is down the street and around the corner from me, but right now we're sharing screens together.
That's right. That's right. It's a beautiful morning. Thank you for having me.
It is. Art, tell us a little bit about you before we officially begin. I want to respect your time. I know you have to hop off by 9.
Oh, yeah, I'm fine. I'm fine. I got all day for you, McKay. But we'll do it. We'll do an
Oh,
all day stream. We'll do a marathon stream. See who drops first. But yeah, my name is Art Wood. I run the Art Wood mortgage team of Luminate Bank. A bank out of Minnesota. I found out what I was good at, what I was not good at. I was good at sales, good at figuring out solutions, but I was not great at bookkeeping and payroll and all that stuff. So I partner with a bank. They do all of that, which means because I partner with a bank, I'm licensed nationwide. So anything that you call state is I can lend in, and I've probably lent in 25 of them over the
right.
last 20 years. I will celebrate next month 21 years in the business,
Okay, okay.
and since 2019, I've been. It's funny. There's two rating agencies that one Scotsman's Guide that just says you're a top originator, and the other one is a Mortgage Executive Magazine that says you're top 1% in the country. So at one time they got in a little pissing match, and if you applied for one, you couldn't get the other. You whatever. So you could only apply for one. But then I told my marketing team that yesterday or last year when I made top 1%, and they're like, "Hey, let's put that out there. I can't get the Scotsman's Guide because and then I got the Scotsman's Guide too." So I was like, apparently they cured it. So yeah, top 1% of the country, top loan producer, and um, yeah, doing it for 21 years. My dad, when I decided to do it because I left the family business 21 years ago, he said, "Oh, they're just going to fire you when rates go down." So, or when rates go up, I'm sorry. I'm still here, and to my credit, I never got out. There's a lot of folks that got out in '08 and '09, 2010, and
Yeah.
when it got hard, but I've kept chugging along, and it's proved to be a very valuable career for me and my family.
Yeah, definitely. I mean, you're like a staple in the community, which is a blessing. With referrals come, people see your face, you support the other businesses in that space that your office has been in forever, so that is definitely a powerful place for you to be in. And you have a good heart and a good head and all of those wonderful
Thank you.
things. Well, today we are going to be speaking about the most asked mortgage questions. Artist just shared he's been in these real estate streets for almost 21 years. And I know you have heard all sorts of them that make sense, that don't make sense, that leave your mouth held open. We know there's no stupid questions, but there are definitely questions that need to be asked and answered. And the buyers or refinancers, whatever the situation is, needs to remember those answers as they're out in the world functioning, making financial decisions. That definitely are important, So FHA doesn't mean a first time buyer. What does that mean if you're able to qualify for an FHA loan?
Well, the funny thing, everybody just thinks that, maybe it's just because the first two letters are F and H, first, first time home, whatever. But everybody just thinks that, that, hey, no, I want an FHA loan. I'm going, well, you don't know what you want, actually. Um, and we may get to this later in the conversation as well, but I'll go ahead and address it now. I always liken it to a choose your own adventure book. Did you ever read those?
Yes, I love those.
So for those that don't know what they are, which is probably anybody under 40, you know, you'd read maybe the first 12 questions, introduce the characters, everything else, and then they'd have an important decision to make. And you go into the woods, go to page 13. If you want to,
Yeah.
go, to the highway, go to page, 15, and then they'd go along. So you'd have infinite, possibilities, which you don't have infinite possibilities in mortgages. But I'm going to ask a question, what's your credit score first and foremost?
Hmm.
And credit score is going to lead me down that path pretty easily. If it's in the 600s, it's probably FHA. If it's in the 700s, it's probably conventional. If it's in the 500s, I'm probably going to talk about credit repair.
Yeah.
But and then we're going to talk about, what are you buying it for? Are you buying it for an investment property? Are you buying it as a second home? You're buying it for primary residence? And that's going to lead me down another path as well. And FHA is only for primary residences.
Right.
So anyway, you go through, then it's, hey, by the way, you're self-employed, W-2, what's your job look like? You're asking all these questions, and in my mind, I'm bobbing and weaving and avoiding obstacles, and we find that we finally end up. It's like maybe like Plinko, you're ding 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 ding, whatever, till you end up at whatever the answer is, and that answer may be, sorry, you don't qualify. We hope not.
Right.
Um,
Not yet.
it may be a no. It's probably going to be a no for a long time unless you change things, or it's like, hey, it's not, it's just not now.
Mhm.
But the other thing is everybody thinks that FHA is the only low down payment option. Technically, as a first time home buyer on conventional, you can put 3% down versus FHA, you're putting 3.5% down. So really the biggest driver is the credit score. If it's over 740, you're probably going conventional. If it's
Mhm.
that 700 to 740, you're probably it depends. And then under 700 is probably FHA. But the best clients in the world are the ones that say, oh, hey, I'm rewatching Game of Thrones again.
Mhm.
And it's, nothing, Jon Snow. I like those folks that say, Art, I really need a true leader, guide, mentor, guide through this because I know nothing, Jon Snow. I know nothing, Art Wood. And just trust my guidance to say,
Right.
but because there's a lot of folks, there's a lot of mortgage folks that specialize in FHA, and the reason that is we make more money on FHA.
Mm,
So people try to push that way, and I'm like, well, that may not be the best solution.
right.
If I think, I'm probably 80% conventional, because my circle, has good credit, or whatever, and has money. So, but anyway, so yeah, FHA does not mean first time home buyer. And, if you really want to be a good client, trust a mortgage guy and say, hey, put me in the best loan possible.
Yes, definitely. The best loan possible. Not think that they know it all because they heard it from someone who got one or they saw it online or wherever the information was originated. Definitely. Trust your lender, your mortgage professional. They especially since they know more than you do. They're the
Well,
money people.
yeah, and I will tell you, I mean, the millennials are, I'm not gonna say the worst. The millennials a lot of times are challenging, millennials and younger, because you will go tell them. And by the way, I'm not trashing millennials. I just want to challenge some behavior. But you're their trusted real estate agent. You say, here's Art. You need to call Art because he's great. You need to call Bob the inspector or whatever, whatever. And then they think they know more than you because they've Googled it and they're doing more research. And then they may find that the inspector's a little bit cheaper, but then they're a deal killer. They may find that somebody on www.cheapmortgage.com is cheaper, but they don't get they don't answer their phone. It's a nightmare. They don't know what they're doing. They can't get you to the closing table.
Yeah.
So, we're in an age, to your point, after the pandemic, I'd much be rather sitting right next to you in a room talking,
Yeah.
um, than this. And we should probably make that happen because I have my podcast studio. We could probably go do that. Um, but there's relationships and there's reasons, there's reason you're referring a lender. There's a reason because you trust them. You've got a lot more experience in that. So I'm gonna get off my soapbox now, but I do think the internet serves a good purpose to do a little bit do a little education,
hmm
but you gotta trust the people that have been there before you.
Yeah, definitely. And Art, we did do an in your office interview. It's on the World Wide Web too, several years ago.
That's right.
Same.
That's right. We look. Somebody came in my office the other day. They hadn't seen me in a year. Like, when did all that gray happen? I'm like, shut your mouth. You get out. Get out. Get
Oh,
out.
you see. Oh, I got it too, but Miss Clairol is my friend, honey. She's all
Right.
there.
Right. Right. I'm thinking about it. The men can't pull it off like women can.
Yeah, that facial hair is something different.
Yep.
It looks good right here, but if you part this Red Sea, ain't no telling what you might see. And okay, Art, let's go. Well, the energy is great. I love the internet because this is how people see who we are. This is how they decide if they want to pick the phone up and call us or not. We don't have to work hard and trying to sell anybody on what type of person that we will be as we're helping them. So I appreciate you so much from the first time I asked you till now. I love your energy and definitely am always happy to work with you for sure.
Well, we put the fun in funding. Like, if
Hey,
you want a spreadsheet guy that is stoic or whatever, there are lots of folks out there. I am not that guy. If you want somebody that will hug your neck at closing and make jokes and pray with you and do all the and be a real person, be a relationship in your life, I'm your
yeah,
guy.
I love it. Put the fun in funding. I like it. Okay, so let's get back to these questions.
Yeah. Oh yeah.
We are talking about real estate and mortgages. So, do you have to have that historic 20% number that we've heard about forever? Do you have to have 20% down to purchase a home?
No, I mean that's kind of a an old wives' tale or old grandpa's tale. I don't remember. I remember 21 years ago. I don't remember what mortgages were like 20 years before that or 30 years
Mhm,
before
mhm.
that. But people seem to think that's the case, and even even when they know it's not the case, they feel like that PMI private mortgage insurance is the
Yeah.
dreaded cuss word of the mortgage industry. So they're like, oh, I got to put 20% down. Well, so let me first and foremost, for those that don't know, with FHA loans, you're going to pay PMI regardless of whether you put 5%, 10%, 20%, 30%, 50%, 70% down, you're going to pay PMI.
Okay.
So you always pay PMI. And then it'll fall off after a certain amount of years. With conventional, if you don't put down 20%, you pay PMI. And actually, with FHA, it's considered MIP, mortgage insurance premium versus private mortgage insurance. And what it does is it protects the lender because it's on a conventional standpoint, it protects the lender because you're not putting down enough, so they're not willing to take the full risk. So the PMI company is taking the risk that you're gonna pay the mortgage or not pay, well, taking the risk that you will pay the mortgage. But with PMI, and this is how, if we go back to the question before that I helped decide which way, like on that 700 to 740 range,
Mhm.
FHA's PMI is the same no matter what your credit score is, no matter what your debt to income is. It's based on the loan amount. Conventional is going to be a higher premium at 5% down, a little bit lower at 10% down, and a little bit lower at 85 or 15% down. And the higher your credit score, the less your debt to income, the lower the PMI. So if you come in and say, I want to buy a $500,000 house, I've got a 760 credit score, I've got great income, so my debt to income is 25%, your PMI might be $50.
Mm. Okay.
So it's like, are you really willing to say, it's not like your PMI is going to be $300.
Mhm.
But now, if you have a low credit score, you have high debt to income. I've seen it be really expensive, and that's when we like, well, maybe FHA is the better way. But it still goes back to that trusted mortgage, advisor is let's sit down and talk about it because what's happening if you look at a $500,000 house next year, in theory, it should be worth 515. The
Mhm.
next year it should be 540, or something like that. Well, the whole time you're waiting to put that down, and it's like, well, what am I really saving for? Because my house is getting away from me while I'm trying to save 20%.
Mhm.
And it's like I'm paying, I would have been paying $150, maybe an extra principal and interest, a month if I just would have put 10% down. But now I'm getting in the house and it's appreciating. I'm getting that $15,000 a year in appreciation.
Yeah.
So again, it's I think you need to have $20,000 in your bank account first and foremost to be able to start looking at a house. But you certainly do not need to wait to 20%. And 20 and investment property typically is 20%. But I might tell you that you need to wait, but probably not. It's just a misconception that PMI is a cuss word and it's outrageous.
Gotcha. Thank you. I appreciate that. And the rationale behind waiting and that equity potential for equity. And besides the fact that you're paying someone else's mortgage when you're paying your rent. So you're losing out several different ways because we all need somewhere to live and make it make sense. Of course, being mindful, and doing all the things is important too. So we want to keep people focused and make sure that they have all the information. So that is why we are in the room. But there's another question, Art, that I know you know the answer to because I mean, what's the rate of the day? Come on, Art. What's the rate of the
I'm about to hang up. There's no such thing as a rate of the day. There is no such thing as a rate of the day. Um, and that's what drives mortgage folks crazy. The good ones that aren't rate salespeople. We got to be solutions based. And um, if you stick with me for a minute, this gets a little complicated. But I had a lady yesterday. I saw a front of '90s cover band, and I was going to practice. It was 7:15 night, Monday night, and I didn't realize this lady was talking to another mortgage person, and they're like, "Well, what's the rate?"
day?
And I'm like, first of all, I don't. I mean, I remember who you are. but I don't remember what your credit score is. I'm sitting here driving and I'm like 6.75, give or take an eighth.
Mhm.
But then I started thinking about it and going, this lady is going to sell her house and she's going to put a large down payment down 3 months from now after she buys the house. And how long is she going to, she her house is paid off now. I call her back. I said, I got a different strategy. I said, why not instead of paying $18,000 in closing costs and escrows, why don't we bump the rate up kind of as high as we can? Let's go to 7.5. Your closing costs at this point are only 6 grand, and the difference in payment at the time was like 150 bucks a month. So it's like if you don't do anything, you break even on that rate and closing costs. The higher rate with lower closing costs, lower rate with higher closing costs. You break even on that in 6 years. How long do you think you'll have this loan? She goes, probably 5 to 6 years. I was like, all right, so anything above and beyond that, it'd be wise to go ahead and pay the closing costs now or whatever. But you're gonna write down, do a recast on the mortgage, and I'm getting in the weeds, and I apologize, but it's mortgage nerd stuff. But you're gonna throw down $300,000 on this thing 3 months from now, and um, and recast the mortgage, which means you keep the same term, you keep the same rate, but you recast the payment based on the huge down payment you're making afterwards. And believe it or not, the payment was going to be exactly the same
Mm.
for 7.5 versus 6.75, because instead of paying extra in closing costs, she was going to put that down towards the principal. So there was no rate of the day for her. I mean, that just didn't make sense. And it took me 47 minutes, 18 seconds, because I happened to look it up with her on the phone. But she was kind of a mortgage nerd like me, and she got it. She's like, instead of wasting $11,000 extra on closing costs, we'll use that to put down against the principal. Then when we pay it down, I mean, the payment was going to be exactly the same, but now they've got $11,000 more in equity.
Yeah, I mean
So
that speaks volumes for you to be able to work that backwards and for her to understand. Because I mean, it's more than just like you said, the interest rate right now. Like, what does the future hold for you? So that's very.
I mean, you always have to ask that because and she says, well, because I'm like, hey, their interest rates will probably drop at some point. I don't know how far, don't know when, but they'll
Mhm.
probably drop at some point. And and when they do, we'll refinance. Well, won't I have to pay closing costs again? I'm like, well, it depends. I mean, we may be able to we'll have the exact same conversation.
Mhm.
6.5 is going to be no closing cost. I'll be or very low closing cost, and 6%, was going to cost you 10 grand. Well, what's the return on investment? You cannot spend money on anything until you look at return on investment. And
Right.
mortgages are exactly that same way. So, and then but then you also there's a different rate for FHA. It's close to conventional. There's a different rate conventional, different rate for FHA, USDA, non-QM, bank statement loans,
Mhm.
investment properties. So there's just not a rate today. But Freddie Mac publishes the average market rate, which that's what people want to hear,
Right.
which is approximately 6.75
Gotcha.
today
Okay. Today,
on August 19th. I have not looked at. I think
2026.
I think Trump paused tariffs on Canada, so I think the market's doing okay this morning so far.
I know, right? And that's it. What's happening today? What's
Yep.
happening today?
And by the way, I don't remember how long it takes, but I'm good for as long as you want to go. I reserve the entire day for you, Makeba.
Oh, I know. I'm so glad we were able to make the adjustment in the day because
Yep.
this feels a little better, flows a little better. Happy that you're able to make it. I do have one more question. Art, I'm just going to share. I'm 54 years old. I'm over here going through a hot flash. I don't know if your wife is there yet, been
Yep.
there. Oh my God.
Yep.
The fan.
Well, that's a whole nother story. We've actually started going to a place and trying to get our hormones right. It's helped her a lot. It's helped her a lot.
Okay, I got you. This is new for me. I remember hearing all the stories, and I was over there. I was over
Right?
there. Now I'm here.
Yep. Yep. Yeah, well, you got me. Yeah, I turned 53 in about a month. So you got me by a little bit.
Woo. Okay. One more question. One more question. I'm self-employed. There's a lot of self-employed people over there in this world. It's a lot of people that have to do several things to make the bill, to make sure they have enough money at the end of the month. So what does self-employed look like? I mean, can self-employed people get a home? Can they get financing?
Yes. Yes. Here we go, get in the weeds a little bit again. Being self-employed is not the problem.
Mm,
It's the folks that write off everything to avoid taxes
yes.
is the problem. For the life of me, because the bank income, the mortgage income is W-2 for me.
Hmm.
So that's nice. But then I have other things where I'm self-employed. And I'm very on the up and up. So I don't know how people get so creative. But holy crap, they get creative and they don't understand. So when I'm looking, if we want to go conventional, again, we're back to the choose your own adventure thing, is but if you want to go with a conventional FHA loan, then it's the amount of money that you pay taxes on. You can add back in depreciation and basically about half of the mileage, or the truck and auto write off, and some amortization. But really, that's it. So everybody says. In fact, I had a guy the other day that said, "Oh yeah, I make $105,000." I'm like, "That's fantastic." I was like, "Yeah, that's what you pay taxes on." Yeah, yeah, yeah. And his tax return, and yes. Top of the Schedule C that he had up there was $105,000, $47,000 in car and truck write-off, and he
Mm,
made and he made 50,000. He wrote taxes, or he paid taxes on $50,000. And
yeah.
like, you actually make 50, plus we can add back in the car or whatever, so that's about 25. So you actually make 75,000. So yeah, so yes, if you want to go conventionally, there's a lot of folks that do it the right way. There's a lot of folks that do it the wrong way.
Hmm.
But then when you do it I can't say the wrong way. That's I don't want to put anybody in that box. But um, the problem is, like, there was a gal that's a great mortgage person now, and my wife was in her wedding, and she used to be a rep for Citibank when I was a broker, and many years ago, like 2020 years ago. And she had been an underwriter before, and she says, "Art, I don't write off anything. I had to kill more loans
Mm,
because I'd rather just pay the taxes and be able to qualify for what I want." So, so then all of a sudden, they start talking about bank statement loans, 1099 loans, P&L loans, which I do a continuing education course for all of that stuff. But
mm,
um, I always dismiss those because we would have to broker them out. We'd send them to somebody else. You'd lose control. You'd have to learn a whole new process. It would take forever. They would never close till I came to Luminate, and we do everything in house.
perfect.
Same underwriter, same processes. It's wonderful. And it changed my mindset a lot, because let's just say you make $150,000 a year on that EXP 1099.
Hmm.
Um, and you write off leg legit expenses. Let's say that's 25 to $30,000, marketing, mileage, whatever. And now you've got $120,000. You're probably going to pay 30 grand in taxes, 25 to $30,000 in taxes. Um, so do you do that and qualify, or do you go get a bank statement loan and pay $100 more a month in a higher rate, but avoid Uncle Sam? So would you rather write a $30,000 check to Uncle Sam, or for your mortgage payment to be $100 more a month? And again, back to that trusted mortgage advisor thing, it's like and then, I mean, I had a lady that we were doing the bank statement loans. They had a business that had just been 12 months. Um, but all of their income on the bank statement came like within the first 3 months, and there was nothing else. So we're like, can't use that. And then she said, well, how about this other one? They had 12 months. Well, they had a bunch of NSFs. They had like
Mm,
60 NSFs. So like, can't use that.
yeah.
Um, so then we were able to use she wasn't 1099. Then we were able to use a P&L loan because her CPA was willing and able to
Right.
say, here's, on letterhead, on everything else, here's all the expenses here. This is what she's making. She's making $100,000 a year. Great.
Hmm.
That's what we use.
Yeah. Yeah.
So, again, and then with the bank statements and the P&L, they're called non-QM loans, non-qualified mortgage loans. With those, it's going to require more down payment.
Right.
At least 10%, but at 10%, the rate's pretty crappy. So, it's at 20. Um, but so yes, I mean, the short answer, I get people say I'm self-employed. I hear it's a pain in the butt. Well, first and foremost, 95% of self-employed folks, you send me your tax returns in 5 minutes, I know whether you can get the loan or not. I did get one the other day that had 25 different tax returns for 25 different businesses, and I gave up. I was like, I sent it to an underwriter. I said, please do this for me. Please do this for me. So no,
Yeah.
you just have to look at that strategy. It's either pay a little bit more in mortgage, or pay a lot more to Uncle Sam.
I mean, the thing is to think about it, not just to willy-nilly run around and just do whatever you want to do. It's give and take.
Yep.
I say the wrong way. If you're going to purchase something that you need to show your income, then you find out what that recipe looks like to make that happen the best way. So for 2 years or 3 years or whatever
Two.
that time frame is, you make sure that your money is flowing properly. And then after that, go ahead and do whatever you want to with your income. I'm not saying, nobody, we don't look good in stripes to be running them
Right.
with the IRS. But when it comes time to purchase a home, if 2 years is what you need, then 2 years is what you get.
Yeah, I'll circle, round it all out by basically saying, you don't buy a house willy-nilly. You need to have a plan. And
Yeah.
part of that plan is talking to me first.
Hmm.
Because there is planning that goes around that. I don't care what you file taxes after you buy the house. That doesn't bother me.
Right.
But for now, let's plan on what our taxes need to look like. I reviewed, the year before taxes and going, oh, that this is going to kill us. Or if you do the same thing this year, we're fine. So
Hmm.
it's just planning and talking to somebody that knows how to put you in the right position.
Right. Perfect. And that's art. He put the fun
And
in
funding.
funding.
Or I'll turn your mortgage into a work of art.
Hey, Art Wood. Look at you.
I got all the sayings.
Dun-dun-dun. Look. All right. Well, thank you, Art, for your time. Nobody even knows we had some technical difficulties this morning because we showed up and we shined and we worked it out. Our tech check, we figured our way through that. We showed up here in YouTube University to give the people what it is that they need to help them buy, sell, invest in real estate. One more time, Art, and I am going to put in a description for everybody who wants to know how to get in touch with Art. Let us know. Let us know.
Yeah, just artwoodmortgage.com. Easy enough. And I have one number. I cannot possibly carry around two cell phones. Much to my family's chagrin, it blows up 404-909-3567. And my email is art@artwoodmortgage.com. But you can find all of that at artwoodmortgage.com as well.
Perfect. Thank you. Thank you. And again, I am Makeba Evans, global real estate professional. I can assist you. Have a huge, humongous, I made that word up. I can't spell it. It's probably in a dictionary though. Team, collective of real estate professionals that can help in all 50 states, several countries. So if you are looking to change your life with real estate, we are definitely here to help you. Again, all of our contact information is in the description, depending on where you're watching this.